Hello folks, I'm LA Little and this is your daily NeoTA wrap. We take a look at these markets. We do it from a neoclassical perspective each time, asking ourselves what happened today. What does it tell us about the coming ones? I do this show 4 times a week, Monday through Thursday, broadcast at or before 10 o'clock Eastern Time, archived on YouTube under the channel LA Little. Do a Sunday show too. If you want to check in on that, that would be fine. Look at a little bit broader perspective from that show, looking at weeklies, monthlies, looking at intermediate and long-term time frames versus the daily, which is what we do here on a nightly basis. If we look at what happened today, it was another day of down, and it's been this way now for 5 days in a row, and we're not talking small numbers. We do a V shape on the way up, we do a V shape on the way down. It's pretty much, a complete turnaround from what we saw. The only thing that went up was bonds. You actually had nat gas up, but you had bonds up, and that was pretty much it. Oil down 2% again. Copper down another 2%. Commodities continue to, take a hit, 0.5% lower on gold itself. Let's look at the actual indexes, and let's start with. Well, I've got the overseas markets up, so let's just start there because actually the overseas is not a bad place to start given what happened last night in those markets. We've got Taipei up. This market has just made another low. One of the old things they used to say, the old definition before I tried to make a better one, was anytime you get a series of lower highs and lower lows, right? That's a problem, and that's exactly what you're getting all the way down. Now, we refine that to say, okay, this is a swing point low. That's what this marker is here. When you break a swing point low, then you get some action. And so it doesn't always end up that a swing point low is the low, but many times that is the case. And so that's a cleaner way to define highs and lows. So that's the Taipei market. Let's look at what really happened though, and that was in Hong Kong and in Shanghai. So let's pop it up. Let's grab Shanghai to start with. Now Shanghai, if you remember, was doing an ABCD structure, or attempting to, on the daily chart to the upside. So you had this ABCD structure. It popped over it here last week on Thursday. Friday was a tough day, and then last night just crushed it. Didn't have an expansion of volume, but sometimes you just don't get those expansions until the next day down. So tonight is going to be a huge night. The bar that's critical is right into this area. If you look at the price point on it, if you see Shanghai close below 36.50 or so, you got some serious problems because that ABCD structure is dead, and you're actually coming back down, and you're going to try to break out the lows, or at least test the lows. So Shanghai, big night down, 8.5%. There's the headlines everywhere tonight, and it's going to be a big night for them tonight to see how they trade. Hong Kong, of course, anytime Shanghai goes down, Hong Kong goes with it. It's into the top of the big bar. If it stays there another bar, it's going to try to seek the bottom. So that's the Hong Kong market. If we move over to Asia, over to Europe, we also had selling here as a follow through with what was happening out of Asia. This is the German market. The German market closes this gap, right? Then goes down and closes the next gap. So you close this one, you basically close that one as well. You're right at it. And then there's nothing but the lows left. If you look at the support here, the support is right into this area. So if you do close under this tonight, target is the lows. That's the German market. If we look over at the French market, right? French market, same sort of thing. Got a gap here. It's a little stronger than we have on the German market. So you're into the first gap now. If the German market goes to the lows, the French market will try to close that gap. Vice versa. If the French market doesn't, gets a bounce from here, then the German will probably do the same thing. And then finally, let's look at our friends in India, because India was trying to break out. If you remember, on a weekly basis, we actually had that test of this breakdown bar. It was trying to get over it. It struggled at that level, couldn't get over it last week, right? Got up to it, tried to get over it, couldn't. starts to break down today. So India coming back the other way did not get the higher high. So again, if you do that higher high, higher low stuff, right, you got a high, and it looks like another high starting to form here on the downside. Now in this case, if you're looking on a weekly, on the downside, you really don't have a swing point here, you don't have it there, you really have it here. So if you clean this up and you say, okay, where's the higher highs and lows? You got a higher low there, a lower high there, and then you got your low down here. Here's your bounce. If you get another lower low, right, then you kind of have that downtrend going. But until you do that, at least in the neoclassical system, you don't have that series of lower lows, lower highs yet. Okay, let's go to our markets. Let's go to the U.S. markets. And what we want to look at there, of course, is some of the damage that's taking place, in particular on the Dow Jones. Dow Jones breaks a swing point low, and it breaks it with some volume. That break does another trend reconfirmation. It was already bearish, so it reconfirms bearish. Lower low, that thing wants to try and dig lower. Let's look at it on a weekly. So the range that was in effect here is starting to give up. So the range up here now is starting to break down, so you're underneath it. Once you get under it, and if you stay under it a bar or two, and we're on the weekly now, so you'd have to stay on it under it all week, and then probably, you know, do it next week as well. Then these become the target. Now, some of the sectors, as we've already seen, they're down here playing with these lows October last year. Some of them were playing with the lows of it, some of them were playing with the highs. Indexes themselves haven't been down there, haven't even been close. The reason for it, well, it's weighting. It's the weighting structure inside these indexes that are keeping them from doing that. If we go over to the S&P 500, right, the S&P, we were just talking about a V shape on the way up, right? You do this on the way down. Now what are you doing? You're doing another one straight back the other way. Today, this one gets deep into the bar. That suggests to me that you are going to go to the bottom and test. So maybe you get a bounce out of here, but the test is down here at this point. That looks like where it's going to try to head before this move is totally over. NASDAQ made the new high. This was the one. It's like, okay, is the NASDAQ going to tell us something? Are we really breaking out to the upside or not? And when we looked at it, it certainly looked like it was trying to. You had the NDX breaking out, you had the NASDAQ breaking out, but instead it gets reeled back in just like they have all year long. Right back to the gap area. NASDAQ's going to try to fill the gap, and that will be probably in the next day or two. Now remember, you got the Fed meeting starting tomorrow, the announcement on Wednesday. You may see a bounce into the Fed meeting or as a result of it, but this looks like a pretty weak market again at this point. If we look at the NDX comes back in. Now so far the NDX is trying to hold the ABCD structure, but tonight got just slightly underneath it. That's a breakdown. If you don't get back over on the very next bar, that suggests that this thing is going to be sideways instead of up. Okay, if we move over to the sectors, and I'm going to the SOX to start with here. The SOX, you get a break last week, right? Decent volume. Underneath it, stays underneath it today. A little doji, not much volume. This actually looks like it probably could put on a bounce at this point. If we look at the biotechs do a doji. That doji actually has 2.8 million shares coming into 3.3. That looks to me like that also could probably get a bounce. Basic materials, totally different story. It's just coming into the lows. If we put it on the weekly, volume expanding here. If we're coming into these lows, it's not going to have the volume on the weekly unless something dramatic happens. So that looks like it probably will get a bounce here at some point as well. XLE, totally different story. This thing's under the lows, continues to be under the lows. Just the energy sector just totally getting wiped out. Financials, remember we were talking about an ABC, not an ABC, but a retest regen bullish. Underneath it, fails, doesn't do it, sideways range again. If we look at the XLI, which is the industrials come down, they extend farther, have a little bit of volume to them. They've already broken on 2 time frames. They're going after the October lows highs. Technology pushing down again. The big bar here is 41.69. You're trading at 41.98. That looks to be the target, so that one doesn't look to be done. If we look at XLP, which is the durables, that one looks okay. Doing a retest regen off this swing point high and holding it, so that one looks all right. XLV gets underneath, back over, a little bit less volume, looks like it could bounce. And finally the XLY trades back into the swing point high. Doesn't have the volume compared to the breakout bar. That also looks like it could hold. So if you noticed what I was doing there, I'm asking myself, can we get a bounce? Because the indexes don't tell us that. I'm looking at the sectors and asking, can we get a bounce? And it looks like we probably have enough of them set up to allow that. So that's the way that looks. I got a question tonight. It was actually a pretty good question. You might want to hang around. It has to do with the oil market and some of the oil stocks. And the question was, and it was actually interesting because I hadn't noticed it myself, had to do with the monthly charts now of the energy sector. And so the question was, hey, take a look at the USO, which is the oil ETF, and then look at some of the major sector stocks. As a result of that, they're all starting to set up ABCDs down. And if you look at these ABCD structures, and we'd actually have to do the percentages, because if you don't do the percentages, this thing basically goes to zero. Percentage-wise, it's I'll have to do the numbers here. Actually, let me do them right quick, and I'll share them with you just a second. So let me pop up my trusty calculator here. Okay, so here we go. If I run the numbers, we got 39.44 up here at the top, right on this swing point high. We got a low down here, 1561. The bounce is 2150. If you do it on a percentage calculation, instead of, if you take 39 minus the 15, that's basically, 15 more, or more than that, it's 20 something. It's more than the price here. It basically says this thing goes to zero. Well, if you do it on a percentage basis, it's different. That says it goes to 851. Now 851 is still 26% down, from here. But so this was a 26% decline almost. An equivalent decline would be about 26%, which would take you to $8, $8.50. So that would be a heck of a move on the way down if it were to actually expand. So we'll see if it does so. 26%, that doesn't look right. That looks like 50%. So it's 50% down, right? Cut it in half here, it would cut it in half again. Okay, so let's look at so that's the USO. So it's not let's talk about what we got there. We don't have a break yet, right? And even though it's not the end of the month, even if we break it on the end of the month here, we don't have the volume either. So it would be a suspect break if it happens. So in other words, you'd have to be wary of whether or not it actually was going to continue or not. If we go back now and look at the others, the stock sectors themselves, here you're actually starting to get the breakdowns. So for example, here on the OIH, you actually have the breakdown starting to take place. ABCD structure, same sort of thing, right? You went from basically 58 down to 30 or so, so that's 28 points, and that's a good 40% or so, so another 40% down off of this if it breaks. I would note that the swing point lows over here, you don't have the volume, so you're breaking with a lot less volume, which in my mind makes it suspect. If you look at the XLE, which wasn't mentioned as one of them, but I brought it in because this one is actually doing an ABCD down as well, and this one's already broken too. So you have the A here, the B there, ABCD structure takes you into these lows back from way back in 2011. And then finally, if you look at like the oil and gas sector, that one also is broken, and this one has really broken and is broken with volume as well. So when I look at all of these as a group, we've already started to get breakdowns on some of the stocks. You don't quite have it yet on oil itself, and you actually have it on all three of the sectors, and it looks like it is going to break. They will be suspect breaks in all but one case, which says you have to be a little less confident in those breaks. But what does that tell you? in general, it tells you this isn't washed out yet. There's still farther to go here. So, I've heard so many people calling bottoms in these stocks. I would just say, be patient. And until you get tests of these lows that actually hold, both in the sectors and in some of the stocks, it's too early to jump in. And right now, you don't have it. And if this continues, right, you're going to get a total wipeout. Now, what you've got in the past when you had these kinds of situations, right, where you got wipeouts like this, is that you actually got wipeout in some of the banks as well that were financing all this drilling. And there is a lot of debt that's piled up. And if they can't meet their payments, we're going to start seeing problems in banks. That's going to hurt the financial sector. And I'm wondering if it's already starting to do it to some degree, because if you go over and look at some of the regional banks, not the multinational large guys, but if you look at some of the regional banks, you're already starting to see some wear and tear here at the high. For example, here's the KRE. The KRE just can't get up and over, even though the XLF broke out. This one fell sharp. So, there is a little bit more pressure on the regionals right now than on the money center banks. And maybe that's a reflection of what's coming and the set-asides that are having to be made for the oil sector. So moving back now to the actual indexes and, what are we going to do tomorrow kind of a call. I was thinking today, and I said last night, that there was a decent chance that we'd see some sort of a pullback, but more than likely we would have some sort of a bounce. Well, we didn't get the bounce. And if I look at it tonight and say, okay, are we going to get the bounce on these indexes tomorrow? The Dow Jones is already broken down. The indexes aren't showing us anything. The only thing that's showing us something is the sectors. Those aren't strong indications, but there's enough of them to tell us that even if we get a little bit of more decline tomorrow, I suspect we're going to get some sort of a bounce into the Fed as a result of it. So even though I don't have it here, it looks to me like you'll probably get maybe a little lower low tomorrow and then some sort of a bounce, set up the Fed meeting, and then we'll see if that Fed meeting can do anything for these stocks. And if you were my member, you'd already know that I've already said that I don't see how anything can come good of the Fed announcement that's coming tomorrow or actually on Wednesday. So my thought is that no matter what comes out of the Fed, it has to be just, nothing, doesn't do anything for the market or actually hurts it. So I think if you get the bounce into the Fed, it's probably just going to be another shorting opportunity to see these things go to the bottoms. That's it for tonight. Thanks for joining me. You tell a friend, tell two. I'm LA. This is and it was your daily NeoTA wrap. Have a great night. I'll see you next time.